Hello, everyone. Welcome to another exciting edition of my weekend series as we gear up for the new trading week. In today's video, we will be delving into the dynamics of the XAUUSD market and provide a detailed follow up to last week's action. In fact, we had an incredible last week, capitalizing on over 1,000 pips from both buy and sell positions. As you will see on your screen right now, this was our setup for last week's trading session. So we had two key factors on this chart, one of which is our key level situated at the $2,360 area. And of course, we also had that descending trend line after connecting the series of lower highs since price tested that all-time high zone, giving us a beautiful confluence at that our key level. So at the beginning of the week, using our key level as our yardstick, we were able to capitalize on that bearish momentum below the 2360 as we saw a 270 pips move before buy pressure resumed and of course led to the breakout retest of the trend line to incite more buying opportunity for us. For detailed breakdown of each of our entry points, check out the link in the description box below. And congratulations to everyone who joined us on this profitable journey. Looking ahead, the coming week holds great promise as the market may see various psychological reaction, especially with price action back at multi-week highs above that $2,400 area. Last week's bullish momentum was driven by softer than expected US inflation data for the month of April, fueling hopes for rate cuts from the Federal Reserve. However, cautious remarks from the Fed officials on Thursday suggested that they might keep borrowing costs higher for longer, indicating no rush to cut interest rates this year. This could strengthen the US dollar and impact our trading strategies significantly. Now, given this recent twist in the Federal Reserve stance, how will investors navigate the current market dynamics? As always, we will be leveraging our basic tools, the economic calendar, trend lines, key levels, and chart patterns to predict possible price movements. Before we dive into the details, please, I want you to remember that this presentation is for educational purposes only and should not be taken as financial advice. Forex trading carries inherent risk, so approach it with caution and seek guidance from qualified financial experts. With that in mind, let's jump right into the analysis and aim to replicate last week's success. So, our first point of contact for this week is going to be on the 4 hours time frame as there is nothing much to talk about on the daily time frame as the structure from last week still remains the same. Now, after taking into consideration the character of price action since the month of March, that's an historical data of about 2.5 months, it is quite obvious that the market has been on a strong bullish momentum. And in fact, after connecting the series of higher lows, we have a couple of ascending trend line to buttress the strength of the buyers in this market. Now, zooming into the current structure here, and despite the strong bullish momentum we have been witnessing in the last couple of months or so, you would have noticed that ever since price action tested that all time high zone around the $2,431 area and the $2,400 area, we saw a barrier for buyers as every attempt by buyers to break out of the zone has been met with strong resistance from the sellers, as you will see here. And fast forward to recent times, that is last week's trading session, towards the end of last week, you will see that price action has gradually and eventually back into that same zone, which I have considered to be a supply zone as long as sellers continue to maintain selling pressure around this particular area. Now, in addition to these structures we have identified, is our key level, which is situated at that psychological area at the $2,400 level. And of course, you know how we use our key levels in this community. As long as price action remains above the key level, we are going to be looking out for patterns and structures that support the idea of buying, and we would not be considering selling unless price action breaks down, retests the key level to join a bearish move to the downside. Now, considering the fact that price action is still sitting above an ascending trend line and above our key level at the 2,400 area, in fact, we will continue to look out for patterns that will suggest an uptrend continuation. Now, I have three setups I'm looking out for, especially within this area ahead of next week. But before I go into these three trading setups, let's quickly run through and keep tabs with the fundamental factors that will be influencing the sentiment of the market around this crucial juncture during next week. And by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, of course, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for next week, and based on the asset we are looking at, we will be focusing on high impactful events from the United States economic docket. Now, after spooling out high impactful event on the economic calendar, we have a bunch of events to look out for. Now, the first impactful event for this week is coming in on Wednesday, that's May 22nd, and that is the publication of the FOMC minutes. Now, this minute here is going to be providing markets with an insight into the discussions and decisions made by the Fed regarding monetary policy, and of course, including their interest rate decisions. It is a very crucial event for market participants as decision because they offer clues about the future direction of interest rate, which can significantly impact the value of the US dollar. Now, fast forward to Thursday, May 23rd, we have the S&P Global publications, which will feature the manufacturing PMI and the services PMI for the United States. Now, this data here offers key insights into the health and performance of the service and manufacturing sector of the United States economy. So these are the three impactful events we will be looking forward to this week. And of course, as technical traders, we do understand that the anticipation of this event as a way of influencing the behavioral patterns of market participants within the current structure we have, which will reflect on the chart as price action. Now, talking about price action, let's go back into my analysis. Now, we are at a crucial juncture where price action is currently oscillating within that supply zone. Now, the question as we head into the new week is, will the bullish momentum persist in such a way that it will break out of the supply zone to welcome new highs? Or will selling pressure persist in such a way that we will see price action respect the supply zone one more time to push a sell off in this market? Now, the three setups I'm looking out for. Let's talk about the bullish potential here. Since price action has broken out of our key level at the 2,400, I would like to see price come back and retest the 2,400 area, which interestingly shares a beautiful confluence with that ascending trend line to incite an uptrend continuation where a further breakout of the $2,431 level will be welcoming more buying opportunities. However, it's not all the time that price action comes back to retest structure as it may continue its bullish momentum from where it is. So, in that regard, we will be considering an uptrend continuation pattern, maybe in the form of a flag pattern, pennant, or triangle structure, whichever case it may be, after which a breakout of the resistance line will be all we need to confirm the uptrend continuation. So this is my bullish bias on this particular asset. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers can also come in. Now, what are the conditions that will make us consider selling the XAUUSD? Well, I would like to see price action drop below the 2,400 and with continued selling pressure below the structure leading to the breakdown of this ascending trend line will be a good signal for us to join a bearish move. Now, how far will that bearish move go? It depends. Well, we have another ascending trend line here, which if price action gets into the structure, that's about 350 pips move, we can see an uptrend continuation from here, or in fact, price could break down the trend line to incite a sell-off. So you would agree with me that we are at a crucial juncture in this market, as depending on how market participants react to the zone during the early hours of next week will give us a clue into what our next line of action will be. Trust me, I will be with you in the comment section of this video to give you update on what I think will happen in this market after monitoring the behavioral patterns of market participants around the structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decision, I will really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.